The Fed's unexpected alignment with Ripple. The Federal Reserve just confirmed something that XRP holders have speculated for years. The groundwork for a new financial system is actively being laid out, and XRP may sit directly in its foundation. What the Fed said publicly is nothing short of historic, but what it implies about Ripple, XRP, and even Stellar's XLM goes much deeper. And if you've been paying attention, it's clear. The financial system isn't just evolving, it's being rebuilt from the ground up, with Ripple positioned right in the middle of the architecture. Let's start with the foundational truth that mainstream media often ignores. Ripple has maintained strategic relationships with regulatory and central banking entities for years. This wasn't just passive communication, it was integration. Ripple has participated in high-level policy discussions, joined global standard-setting bodies like ISO 20022, and even attended closed-door meetings with senior U.S. financial officials. Ripple's head of public policy met directly with Nellie Leong, the Undersecretary for Domestic Finance, alongside a short list of players that included Stellar, Chainlink, Paxos, and Circle. That's not a crypto panel. That's a monetary policy council. What's now becoming undeniable is that Ripple was never just trying to launch a token. Ripple was architecting a compliant, regulated network that would act as the connective tissue for future tokenized money flows. And now, with the Fed's public endorsement of stablecoins as viable payment instruments, Ripple's playbook is being validated in real time. Here's where most people get it wrong. They assume CBDCs and stablecoins are two entirely different things. They're not. From a technical and functional perspective, both are programmable digital representations of fiat currencies. The difference lies in who issues them. CBDCs are minted by central banks, while stablecoins are released by regulated private institutions. But both operate on digital rails, and both serve the same function: transmitting value in a programmable, trackable format. And here's the kicker: both need a settlement layer. That's where XRP and to some extent XLM comes in. What the Fed just implied in its latest stablecoin remarks is revolutionary. Stablecoins won't replace the dollar. They'll reinforce it. These aren't alternatives to government money. They're extensions of it. And Ripple, through its Roust stablecoin, is building the framework to make that happen. Roust, backed by none other than BNY Mellon, the largest custody bank in the world, isn't just another dollar-pegged token. It's a signaling device to institutions. It tells them, this is where regulated digital value will live. And where does it live? On the XRP ledger. This is more than a product launch. This is Ripple quietly becoming a compliant digital clearinghouse, a digital bank operating under US law, using XRP as a liquidity mechanism underneath it all. And once you understand that, the implications become massive. Ripple is laying the technical rails, the regulatory bridge, and the liquidity protocol all in one move. And the Fed just gave it a green light by embracing the very concept Ripple built for over a decade. Even more compelling, this isn't happening in isolation. Ripple is seeking a US bank charter. The ISO 20022 upgrade to Fedwire is going live. And the terminology once unique to Ripple, like level playing field, is now being echoed by Federal Reserve governors. We've officially entered a new phase. The alignment is no longer theoretical. It's happening. Ripple isn't fighting the system. Ripple is becoming the system. And the Fed just quietly confirmed it. Subscribe to Be Crypto Smart for deep dives into crypto's hidden infrastructure and insider moves driving institutional adoption. Roust, BNY Mellon, and the new digital foundation. Let's talk about ROUSD, Ripple's enterprise-grade stablecoin. On the surface, it looks like just another dollar-backed token. But dig deeper, and you'll realize this is the linchpin in Ripple's full integration into the future of finance. Roust isn't a marketing gimmick. It's a foundational instrument in the architecture of institutional crypto adoption. BNY Mellon, America's oldest bank, with over $40 trillion in assets under custody, has stepped up as the official reserve custodian for ROUSD. That alone should turn heads. This is not some speculative DeFi project partnering with a niche custodian. This is Ripple joining forces with one of the most trusted financial institutions in the world. And that move signals one thing: serious institutional intent. BNY Mellon isn't just safeguarding reserves. They're signaling trust to Wall Street. They're saying, this isn't some crypto startup trying to disrupt banking. This is the evolution of banking. By backing ROUSD, BNY Mellon is effectively giving Ripple the green light to become part of the US financial core. Think about the implications of that. A blockchain company with its own ledger, its own liquidity token, and now its own dollar-backed stablecoin is being invited into the upper echelons of American finance. This partnership represents more than technical integration. It's philosophical convergence. It's the moment where TradFi and crypto stop competing and start collaborating. Roust isn't just being launched. It's being trusted by the same institutions that once dismissed crypto as a passing fad. And here's where things get even more interesting. Every transaction made with Roust on the XRP ledger increases the demand for XRP. Why? Because XRP acts as the settlement and liquidity layer under the hood. Every stablecoin issued on XRPL becomes a plug-and-play asset in Ripple's broader ecosystem, where XRP serves as the bridge currency. That's not just theory. That's utility in motion. This isn't about speculation anymore. This is about infrastructure. It's about enterprise-grade systems being built not for hype, but for function. We're entering an era where the big players, the BlackRocks, the JP Morgans, the Fidelities, are quietly positioning themselves for tokenized liquidity. And Ripple is handing them the toolkit, complete with compliance, interoperability, and ready-to-deploy rails. Look around. JP Morgan is already abandoning Ethereum's public chain for more scalable alternatives. Their Onyx platform started on private Ethereum tech, but now they're pivoting. Why? Bottlenecks, congestion, fees. Ripple and the XRPL, they don't have those problems. With sub-second settlement times and near-zero fees, the XRP ledger is built for what's next. Roust is Ripple's Trojan horse. It's the regulated entry point for institutions to start interacting with tokenized dollars. And behind every Roust transaction lies the quiet hum of XRP, acting as the trustless bridge between currencies, banks, and borders. That's how you turn a digital asset into a systemic asset. Ripple isn't just building a stablecoin. It's building a financial operating system. And now it has BNY Mellon helping roll it out. ISO 20022, Fedwire, and the global upgrade. Right now, the US Federal Reserve is in the middle of the most consequential upgrade to the banking system in decades. Fedwire is being retooled to support ISO 20022. This isn't just a cosmetic messaging change. It's the global language of finance being rewritten to include digital assets, tokenized money, and programmable payments. So why does this matter to XRP holders? Because ISO 20022 is the compliance and messaging standard that allows traditional banks to interface with blockchain-native assets like XRP and XLM. Without it, blockchains and legacy banks are stuck speaking two different languages. With it, they're finally interoperable. Ripple has been ahead of this curve for years. It is one of the only blockchain companies to hold a seat at the ISO 20022 standards body. That's not just a signal of participation. It's a sign of influence. Ripple helped shape the very framework that the new financial messaging rails are being built on. And it designed the XRP ledger to be ISO compliant from the ground up. Here's what that means in practice. When ISO 20022 becomes the default language for Fedwire, and by extension global banking transactions, Ripple doesn't have to catch up. It's already compatible. Roust can plug into these systems natively. XRP can be used as a settlement layer in high-speed, cross-border transactions that meet all compliance requirements. And this goes even deeper. Ripple's pursuit of a US bank charter, specifically its application for a national trust bank, means it could directly plug into Fed systems, including Fedwire and FedNow. That sets the stage for Roust reserves to be held at the Federal Reserve itself, making Roust a digital dollar with institutional clearance. Imagine that stablecoin liquidity cleared through the Fed, transacted over XRP. Now layer in Stellar and XLM. While XRP may dominate the institutional cross-border market, XLM is building its own path, particularly in remittances and retail stablecoin corridors. Its integration with MoneyGram and support for USDC already puts XLM in a strong position for compliant retail payments. ISO 20022 compliance could bring XLM further into the fold as these corridors expand. What we're seeing is the emergence of a dual-asset framework: XRP for high-value, institutional-grade settlement and liquidity, XLM for people-powered payments and emerging market access. Both ride on ISO 20022. Both are becoming core tools in the next-gen financial plumbing. This isn't future speculation. This is infrastructure going live. And the Fed's embrace of ISO 20022 isn't just technical. It's strategic. It opens the door for Ripple and potentially Stellar to become native components of the new financial grid. As the global financial system rewires itself, XRP and XLM aren't just tokens. They're becoming the routers of the new money internet. The role of stablecoins and why the Fed cares now. Stablecoins have officially crossed the Rubicon. Once viewed with skepticism and regulatory hostility, they're now being embraced as critical infrastructure. The Federal Reserve itself has acknowledged that stablecoins are not only viable, but essential to the evolution of the U.S. payment system. In a speech that sent ripples through the financial world, Fed Governor Christopher Waller directly stated that stablecoins foster competition and innovation in the payment space. He even drew a parallel that hits home. Stablecoins are like poker chips in a casino. You don't bet with dollars directly. You trade them for chips that can move around quickly and seamlessly across tables. In this metaphor, the tables are platforms like XRP Ledger, Ethereum, and Stellar. But not all tables are created equal. Ethereum is burdened with congestion and high gas fees. Stellar is solid for retail corridors. But XRP Ledger? It's tailor-made for enterprise-level, real-time, high-volume financial settlements. The Fed understands that a tokenized future is coming, and fast. And they're not just watching from the sidelines. They're actively laying out a path to regulate and integrate stablecoins into the core monetary system. That's why Ripple's strategy is so pivotal. Roust isn't just another stablecoin. It's being designed from day one to integrate with Fed systems. Ripple is applying for a national trust bank charter. If approved, this would allow Ripple to custody assets and hold stablecoin reserves directly at the Federal Reserve. That's not a small regulatory checkbox. That's a seat at the table with America's central bank. And it positions Roust to be one of the first stablecoins fully backed by reserves held at the Fed itself, effectively making it a digital dollar with federal-grade legitimacy. That's an inflection point in the history of finance. For the first time, a crypto-native company would be operating as a fully compliant, reserve-holding digital bank, issuing stablecoins with direct Fed access, and doing it all on a blockchain that settles in seconds with near-zero fees. Every ROUSD transaction increases XRP utility. Every stablecoin interaction deepens XRPL liquidity. Every new user or institution tapping into the system reinforces XRP's position as the trustless settlement layer under tomorrow's financial world. And this isn't just about the US either. Other central banks are watching. If the Fed gives the green light to Ripple's model, we may see a global domino effect. Stablecoins backed by central bank reserves, transacted over public ledgers, and bridged by neutral assets like XRP. That's the blueprint for a unified digital economy. So yes, the Fed cares now, because the game has changed and Ripple is playing to win. How XRP and XLM are positioned as the bridge layer. This isn't just Ripple's narrative anymore. Stellar's XLM is strategically aligned with the same long-term vision, serving as a decentralized bridge asset that connects disparate fiat systems, stablecoins, and digital money platforms. But here's the key: XRP and XLM are taking complementary, not competitive, roles in this rapidly forming new infrastructure. XRP is quickly cementing itself as the institutional-grade settlement layer. Its use case is tailored for high-volume, cross-border liquidity, built for banks, financial institutions, and governments. But XLM is taking a more grassroots, people-powered approach. With its deep integrations into Circle's USDC, MoneyGram's cash-in/cash-out rails, and its rapidly evolving Sorbonne smart contract framework, Stellar is locking down the retail and developing market access side of the programmable money stack. This isn't by accident. This is by design. XRP handles the institutional plumbing. XLM powers the user ramps. Together, they form a dual-asset, dual-rail system that can support both the high-end settlement needs of global capital markets and the everyday transaction flows of individuals around the world. And that ecosystem is already live. We're seeing fiat-backed stablecoins, including ROUSD, Euro-backed tokens, Brazilian Real, BRL, and soon the British Pound and Japanese Yen, being issued natively on the XRPL. Each one of these tokens leverages XRP's native decentralized exchange and pathfinding to enable instant value routing. Every transaction with these stablecoins increases the liquidity gravity of the XRPL, pulling more capital and developers into the ecosystem. On the Stellar side, USDC is gaining serious traction in remittance corridors, NGO disbursements, and payment apps. And Soroban, Stellar's native smart contract layer, is opening new programmability for DeFi, tokenized assets, and compliance-aware apps that can run with speed, security, and simplicity. This is how real-world adoption starts. Not through hype, but through solving actual financial problems. Ripple and Stellar have been building toward this moment since their earliest days. The original vision was simple: eliminate the inefficiencies of correspondent banking. Replace the patchwork of siloed fiat rails with neutral, open, decentralized bridge assets. Now, that vision is materializing. XRP and XLM aren't just cryptos, they're infrastructure. They are becoming the switchboards for a new, interoperable global money system. Whether you're a central bank issuing a CBDC, a fintech deploying a stablecoin, or a consumer moving money across borders, these two assets offer something no other network can: neutrality, speed, and trustless liquidity. And as ISO 20022 rolls out, as stablecoins go mainstream, and as Fed-level infrastructure converges with blockchain rails, XRP and XLM will be the silent engines driving the transformation. One ledger at a time. This is how the system changes forever. The Federal Reserve didn't just acknowledge stablecoins. They acknowledged the core principle Ripple has been shouting for years: level the playing field. Now that phrase is coming from central bankers themselves. Ripple isn't trying to disrupt the system anymore. They are becoming part of it. Through ROUSD, through ISO 20022, through Fed Trust licensing, Ripple is embedding XRP at the protocol level of future finance. And XLM? It may not be in every headline, but it's already integrated into live rails with USDC, with Soroban, and with real-world remittances. XRP and XLM were designed for this moment. So what does this mean for holders? It means the noise is fading, and the signal is finally clear. XRP is becoming the backbone of institutional stablecoin flows. XLM is empowering programmable money across emerging economies. And the Fed just showed their hand. They can't build this new system without these technologies. And maybe, just maybe, they don't want to. If this opened your eyes to what's really happening behind the scenes, hit that subscribe button for more breakdowns that go way beyond the headlines. This is Be Crypto Smart, where we follow the money, decode the system, and reveal what's coming next.